So that is a really interesting and pretty exciting way to another strategy to add to my portfolio, so to speak, of different strategies that I could use. And there's always a way to add in different strategies and just to increase your opportunity to have allow more consistent and profitable trades. So thank you, Brian. I appreciate that. And so we're just going to sum it all up, what we've just been speaking. So number one is that the Renko Heiken Ashi chart allows for a smoother entry and exit opportunity.
Yes. Um, it also kind of accents uh, the smoothness of when it's trending. Uh, it takes out a lot of the choppiness from the time base, what the industry would call noise. It takes out a lot of the noise. Um, and with our particular strategy that we use, or with the 9 moving average and our trend channel, it allows us to place our stop loss, our risk management, and manage the trade. Um, yeah, so that's the breakdown of the creation of this particular strategy that my sister is adapting into her curriculum.
Okay, and number two, we recommend that using a combination of both, we use the wrinkle chart, still continue to use the time chart to keep your skills up. Is that correct?
Yes, I would always continue learning how to read the candlesticks to because I believe that's our ultimate level is to be able to look at any chart, whether it has any indicators on it or not, and recognize the movement of that market.
Okay,
So the
and
Renko in our strategy is it's almost similar to riding a bike. When we first, some of us when we first begin to ride the bike, we have the training wheels, and I believe the indicators act as the training wheels until we're able to fully, ride that bike without the training wheels on. And I think that that's our ultimate goal as traders.
okay. All right, and then the last thing is when we see so basically no counter trend trading. You
Not for
wouldn't
novice
recommend counter
traders.
trend trading,
Yeah,
right?
that's like swimming upstream.
Okay,
A lot of work.
okay, a lot of work. Okay, so even though there's a pullback on the time chart, and then we look over at the Renko chart and we see a red arrow, let's say in the as a pullback, and we see the red arrow, and we see some, what could be a possible setup for entry for a short position, as long as the market is in a the trend up, still in an uptrend. We wait for the pullback and wait for the proper setup to continue the long position.
Correct. So if the trend, by just using a simple trend line, we see in this particular example on crude oil, the trend is going up. So we want to ignore all the down signals.
Okay, okay, and then so it looks like um, even though the Renko does smooth out the pricing and allows for to get entry into the market a lot sooner, we still have to recognize and honor the trend channel lines and things like that.
Correct. All
Okay.
rules still apply. Uh, Even though it smooths it out and it looks very pretty, you still want to engage in the same rules that you would use in a time-based chart. So if the trend is going up, you're looking for pullbacks to on the resumption of the long and going long. and vice versa if it's going short. So you're looking for a pullback to the trend line to resume either the down or the upward trend of that trend line, to keep it very simple.
Okay. All right, so there we have it. It's always exciting to, and you know what I like about this, Brian, is that it seems very simple, and that's number one. And number two, I like that you know the what you have added and created and developed here on your Renko chart is provided already from the Ninja Trader platform. So we don't have to go out and purchase something new or try to invent something new. It's all right there that we could utilize as well. So that's what I like about this as well.
Yeah, there's nothing out there proprietary that is not developed from either some form of the drawing tools from most standard platforms. Um, and it all comes back to price. They all are um, analyzing using the analysis of price action.
Right. So regardless of the strategy that one uses, the bottom line is that price is price. So price is going to be the same on a time chart as well as the wrinkle chart. Like, the
Right,
wrinkle chart is not going to show the market being at a different price. They're all price. It's all the same. It's the same market, all
right.
happening at the same time.
Right, right. I mean, it's
So,
just, it's like when you visit a different neighborhood, to be talking about the same
mhm,
thing, but because of that cultural difference, you know, like for instance, dad, American says
mhm,
dad, you go to another pop culture and they'll say poppy,
mhm,
still talking
mhm,
about referencing the same thing, your dad, but it's just,
mhm.
they just say it different.
Right. Okay. So same information, just different charts.
That's all. The time-based
Okay.
chart is going to go to 47.10, and so is the Renko.
Right. Okay. All right. Okay. Okay. Well, this is something that I appreciate you sharing this with our students. I know you already shared it with yours, and they're very excited. So I'm looking forward to you joining us in the next course, whether it's an online course or we'll be super excited if you can come to our on location courses so we can have you in person. And so we're very excited about that. And so I invite you to do that with us and come and share that strategy as part of our course curriculum. So thank you again, Brian,
You're welcome.
and continue to share with us your research.
You're welcome. It's my
I
pleasure.
love the research department, and thank you for sharing with the Empress Wall Street News.
You're welcome. My pleasure.